Welcome back to another video. I had a buddy ask me, what would you do with the $1,200 stimulus check? When he was talking about, how to use the money and possibly investing some of it. So that's what this video is going to be about. And let me tell you, here's what you do. First of all, are all your bills paid? Okay, they're paid? Okay, cool. We're talking about rent, utilities, internet, all that stuff. Pay that up. Then, we want to make sure you have emergency supplies. So we are in a bit of a situation, and even though things are looking better, you definitely need to make sure you've got emergency food for a few months. And I mean like rice and beans and jars of peanut butter. Nothing fancy, guys, just stuff that's gonna last a long time. Maybe a couple 5-gallon jugs of water for drinking, not bathing, but drinking. And guns and ammo. So if you got the food and the water, maybe go buy yourself a rifle or a pistol or a shotgun and some ammunition. I'm not kidding. That's something you need in an emergency. And other stuff that, emergency tools, emergency batteries, supplies, right? Let's say you've paid all your bills and you got all your emergency supplies. What to do with the $1,200 stimulus check? Are you in any debt? Do you owe any money on your car? Do you owe any money on your house? Do you owe any money on credit cards, etc., etc.? Pay that off. I know investing is super cool. It's super fun to be a stockholder and to seem prestigious by owning shares of companies and other funds. But you need to definitely pay your debts before you do that. Otherwise, you're just wasting money. All right, let's assume you've done all those things. What do you want to put your money in? Well, definitely not all of it, right? We want to keep some cash on hand for emergencies and also a major global depression, which will lead to a deflationary system, a deflationary time, which we have not seen since the 20s, the 1929 crash. Back then, money was so valuable, not inflated, it was deflated, that you couldn't get your hands on it. Banks wouldn't let you withdraw your money. Quite the opposite of what you have in Venezuela, for example, basically, what's it called? Hyperinflation. It's the opposite there, right? They've printed out and handed out so much money to their citizens, they've rendered their currency worthless. People are wiping their butts with it, burning it for heat. The opposite can happen if we have a major global catastrophe in terms of economics and finance. We're not there yet. But some of the soundest minds in finance, it's funny, like Vox Day and even my father, who is on the political opposite spectrum of Vox, are deflationists or deflationistas, and they see the deflation coming. So definitely keep some cash on hand. And just to guard against deflation even further, you can invest in something called bonds. Let's just do a little screen. What are bonds? Yes, you're basically buying debt when you buy bonds. It's a debt security similar to an IOU. Bonds are typically very good in deflationary times. So, for example, I don't go and just buy physical bonds. I invest my money, when I want to invest in bonds, I invest in a bond total market ETF. And the one I use is called BND. And it is provided by Vanguard Bank and is a total bond market ETF. So they kind of accumulate the entire bond market, and that's what this particular stock is based on. And it's very low risk. And honestly, it's gone up maybe $7 in the entire time that I've held it for a few years now, and that's normal because we've been in not crazy deflationary times. Bonds are just really low risk right now. They're not exciting though, and they certainly aren't paying a good dividend. I'm getting almost no money in return right now because that's not the type of economy we have. But if we go into deflation mode, you can bet the price of this is going to go very high. And the dividends that are going to be paid from this are going to be worth it, and it's going to be nice. But right now, we're not in that time period, so if you want to guard against eventual deflation, please keep a little bit of cash on hand and invest in bonds. I choose the Vanguard Total Bond Market Index. That's if you really believe deflation is coming. I listen to a lot of financial people on YouTube, for example, and they never talk about deflation. It's always inflation, inflation, inflation. Inflation is so much easier to see. It takes a little bit more of knowledge and analysis and really how much you know about history to predict deflation. But inflation is so much easier to see because the government's printing out like trillions of dollars right now in stimulus money, and obviously that lowers the value of your currency. So the people who are getting penalized the hardest in a inflationary period, which we're heading like in the short term, that's where we are going. The people who are getting hit the hardest are the savers, people who are literally keeping their money in a savings account or just sitting in their checking account. They are getting hit the hardest because your money is worth less and less every time a new dollar is printed. So we're printing trillions. What do you think that's going to do to your savings? Look at the price of a house. A house that used to cost $30,000 in the 70s, now you need to add a zero to it. It costs $300,000. That is not because of anything else except inflation. So I'm going to go over some of the stocks and other funds that I invest in. And yeah, I do use Robinhood. And if you remember my previous video, I have mixed feelings about it. Like, it was the very first no-fee investing app, and I got into it years back. But as far as I know, and please correct me if I'm wrong, Charles Schwab and Fidelity and E-Trade and TD Ameritrade, all these other exchanges, they have dropped their fees as well to compete with this app. So you may not want to use Robinhood. It's the newest one, right? So you might want to use a financial institution that's been around for much longer. I particularly liked Charles Schwab when I had an account with them years back, but at the time they were charging $8 a buy or $8 a sell, which is so dumb. I mean, Robinhood charges you $0. So the problem, though, is you can't switch exchanges. Like, you can't transfer a stock between an exchange. So the exchange you choose is the exchange you're going to be on, and if you want to get your stock from one exchange to another, you got to sell it and then buy it again, and that's incredibly risky, and that's a taxable event, so I wouldn't do that. Anyway, I'm going to go over from the top to bottom of my list what I invest in with my money. We already went over bonds in the total bond market. I don't have any other deflationary guards as far as I know, except maybe some precious metals and stuff like that. But let's go ahead and start. And I'm a big fan of Vanguard Bank, but we do the total stock market index. This is an accumulation of all the entire stock market. So when the market does well, this goes up. When the market goes down, this goes down, but it's very low risk because it's accumulating so many different companies and stocks and publicly traded stock symbols instead of one. I'm not putting all my eggs in a company's basket. It's really just the entire market. Let's look at the definition of ETF too, just so you guys know. I want to make sure we cover that. An ETF is an exchange-traded fund, marketable security that tracks an index, a commodity, bonds, or a basket of assets like an index fund. So it's like an index fund. ETFs are generally pretty low risk. So I do the total stock market index fund. Play around with Yahoo Finance. I mean, Yahoo's not really good for much these days, but Yahoo Finance is still a great site. I have one thing I haven't really covered yet is dividends. When you're looking at a stock, try to find out what the dividend yield is. Where is it? Yield. There it is. So you get 1.8% of your money back in dividends. Not back, but paid out to you. So that's good. VOO is another one, which is the S&P 500, which is a specific market as far as I know. Same thing, right? It's just an ETF. It's an accumulated thing of all these different assets. And then the small cap index fund. So I guess small cap being market cap on, market cap being small. Market cap is the total value of all the shares that are held. So when something has a big market cap, it's a pretty valuable company. All right, that's enough about my ETFs. As far as I know, if I'm looking here, I don't do any other ETFs. I happen to also own this, and I got in this when it was 800 something a share, and at the time I wasn't exactly rich. I only bought 2 shares. Now look how much it's worth. Just, I could technically sell right now. I mean, and be a winner. Like, not to go into my finances, but I spent $1,600 on this 2.5 years ago, and that is now $5,000, and I could sell it. I'm not going to. I believe Amazon is the king of e-commerce, and I only see it going up. Like, it might dip a little bit, but I don't think so. I think it's going to do quite well. Look at this stock. Look at this. Man, imagine if you got into Amazon back in the late 90s or 2000 when it was $48 a share. Whew! It's nice to be able to look at these historical charts, by the way, guys, when you're doing a stock. One thing I will point out about stocks like Amazon and most other tech stocks, no dividend. No dividend. So when you're trading a stock like Amazon or owning it, you are owning it with the intention that you're going to have to sell it at some point if you want to take any value from it, because it will not give you a dividend. Maybe that'll change one day. Here's to hoping they split this stock. When Apple got this much, Apple at one point was worth this much, guys, and they split it 7 ways. So if you had a single share of Amazon, that became 7 shares. Yes, but that totally dropped the price, but you had 7 shares instead of 1. And so you didn't lose any money, and then more people were able to buy Apple, and the price went up again. So here's to hoping that Amazon splits at some point. It's a ridiculously overpriced stock. At this point, you have to, not overpriced, but expensive. Like, you need $2,400+ to buy a single share. I also will definitely want to talk about this. This is my favorite dividend stock ever. Now, it's AT&T. It's an old technology telecom company, but they own a bunch of other stuff that you might not realize, like CNN, for example. Though I'm no fan of them, I do believe that AT&T is a company that knows how to please its shareholders, and it knows how to stay relevant in all these changing technological times. The dividend is pretty good, guys. 7%. Of all my dividend yielding stocks, this one has been paying me the most. And like every 3 months I'm getting sizable amount of money that it can buy multiple shares of this. So let's just say I'm getting more than the price of a single share. In fact, I think I'm getting more than double at this point. It's not I'm not a rich man, but this is exactly what you want, dividend reinvestment. So every time they pay me, it automatically buys more AT&T shares, and then the payout is bigger, and so on and so forth, and you see where it's going. There are people who literally retire on their dividends. They don't actually work, when they don't put their money in a 401k necessarily, but they're getting their money by being a shareholder, and that's it, and just sitting back and waiting every 3 months for a big payout. So start young. If any of you younger guys are like 18, 19, 15, fucking 10 years old, I don't care. This is what you want to be doing, because the disadvantage for me is I'm almost 35. So when I'm 60, I don't know what this is going to look like. But if you start at the age of 10 or 15 or 20, my God, you have so much extra time of compounding interest. You will do very well. Remember to delay that gratification, guys. You need to definitely be buying this kind of stuff. Let's see, what else? I do happen to own a little bit of this because I definitely think it's a great company. It's Microsoft. I think enough said. It does pay a little bit of a dividend. Nothing fancy. I think this will go to a much higher price in the future, and then I'll sell it. I'm not doing this one for dividends. I will talk about this. So I did a smart thing, and I don't know if you guys remember a month back, but oil had basically bottomed out, and the price of oil was actually in the negative, and companies would pay you to take their barrels of oil from them. So I invested in APA, Apache Oil, and it has doubled since then. And to be honest, like, I could sell it. It's not much of a dividend stock when I look at this, and I think I probably will sell it, guys, but I think I'm gonna wait till it comes back up. Like, it was worth $65 back in 2016. Like, I definitely see a recovery personally. So I'm holding on to this one, but I've already made money. It was a good purchase, and this is an example of diversifying, right? So I've got my ETFs that are like total market ETFs. I got bonds. I've got AT&T and Microsoft. And here's an oil company, right? So diversify. Another thing I will tell you guys about is this was kind of a fun one, right? This was a little bit more of a gamble. But Big 5 Sporting Goods was 98 cents a share maybe a month ago. And let's see, can I find it? Yeah, I got it like right here, somewhere right around here. And today it's $1.45. I mean, retail is getting hit super hard, and this is a really good dividend stock, so I probably will just hang on to it as long as Big 5 stays in business. One thing Big 5 does that Dick's Sporting Goods does not do is they sell guns. Dick's Sporting Goods, the biggest mistake they ever made was getting rid of their guns and taking a stance on the Second Amendment, because they're not doing great, and eventually, you know, all the stuff that Big 5 sells and that Dick's Sporting Goods sell can all be ordered online through Amazon, which I also hold, except guns. They're never going to send you a gun online. So Big 5 is a gun store, in my opinion. They've got a great selection of weapons and ammo, and honestly, I think they can get back. I think they can get back to some of these prices. Like, look at this. So I took a risk on Big 5, and it is a risk, guys. So that's just what I did. I will also talk about these two other things I just put a tiny bit of money into. Real estate funds. And Monroe Capital Corporation, I believe, is commercial real estate. Let me see. I don't know. My dad's invested in them, so I just threw like some money in it. Private asset management firm specializing in credit investing. That doesn't sound like real estate to me. But yeah, I own some of that. Maybe it is. And let's see what else. The other one. OXLC. Oxford Lane Capital. So these are like capital investment groups, but look at that freaking dividend. Holy crap, man. That is the biggest dividend yield I've ever seen. 60%. That's like... That's crazy. What about this one? 15. Okay. Yeah, I mean, these are like capital investment groups. To be honest, I think you can see I don't know much about them. They're daddy stocks. So I jumped in even though I think he's going to sell at a certain point. Another thing that I want to talk about, even though it's on the Robinhood platform, I wouldn't use Robinhood to get it, is cryptocurrencies. And the reason I would not use Robinhood for crypto is because, unlike stocks, you know, crypto is actual currency. Like, you can't ask Schwab or Robinhood to like send you a note that is the equivalent of your stock and then you go and pay for something at a store with it. Bitcoin and Ethereum and all the cryptocurrencies are currencies, and you're supposed to be able to hold on to them, and you can't do that through Robinhood. So I don't like Robinhood for crypto. It's not really a crypto exchange. You're really just speculating on the price. If you want to make money in Bitcoin and never have to hold any Bitcoin, Robinhood is fine for that. I wouldn't do it though. Instead, I use Coinbase, and if you're international, I would actually use Binance, but Binance has been somewhat restricted in the US, so we basically have Coinbase and eToro, I think. There's some other ones, but I've only used Coinbase. And, you know, you could probably do an entire video on crypto. In fact, let's just go to CoinMarketCap so you guys can see that, because now we're talking about crypto. I always buy a little bit of these three every month. I also like Tezos. Cardano is good. The reason that I'm talking about crypto is two things. I mean, one, yes, if you believe in Bitcoin and know enough about it, you know that it's going to skyrocket. This 9,700 price, I mean, you're taking a huge risk on crypto, guys, but you know, with high risk comes high reward. And it is said that anyone who owns over a single Bitcoin is going to be very, very, very fortunate in the future. So just something to think about. Ethereum and XRP and Tezos. I'm not actually going to go into what they all are and what they do. I think that's a separate video topic. And to be totally fair, I'm not the crypto expert because there's so many other experts on YouTube that you should be listening to for this topic. But I will tell you, Ethereum, Tezos, and Cardano are important because these will actually pay you what I would say is the equivalent to a dividend, like we talked about before, for just holding these coins. You have to stake them, proof of stake. You might want to look up proof of stake, but well, right now the only one that actually does it is Tezos, but Cardano and Ethereum are supposedly going to be rolling out proof of stake later this year, and the returns are going to be like 7 or 8%. So a year. So the whole thing is like, when it comes down to it, I think of investing in two ways. Buy low and then eventually sell high, right? And that could be a short term or a long term. You buy the shares or you buy the crypto, then you sell the shares of the crypto when they're worth a lot more, and boom, profit. You cash out, you're out. But there's also the concept of not selling and taking the dividends from them, because the dividends will keep filling up your bank account or reinvesting. And if you sell the shares, yeah, you can make a profit, but then you stop your dividend flow. So you kind of have to do a give or take. If you really think you can predict it, you'll sell high regardless and then buy them up again when they're low price, and you'll have a lot of money. But you're going to be very emotional if you don't time that right. And no one can predict the stock market with perfection, or the crypto market. So if you do want to get into cryptos, highly recommend the top three. I highly recommend Cardano and Tezos as well. I'm not really excited about Stellar anymore. Binance Coin, kind of cool. Binance is actually a really, really cool exchange. I wish they weren't restricted in the US anymore. Stay away from these two. If you happen to be holding them, cool. But if you do want to buy them, like, you're taking a big risk, but obviously they're very cheap. I'm not even going to go into why they exist. It's a whole other topic. Anything else down here that I really want to make sure you grab? Not really. I own some of these, but I wouldn't advocate any on this video. So there you go, guys. Like, that is something you can do with your stimulus money. If you've paid all your bills, you paid all your debts, you have emergency supplies. All the emergency supplies. Like, if you don't have a rifle or a gun and you can actually get one in your country, like, get one. If they're totally forbidden, I'm not advocating you break the law. But get your emergency supplies, and then take everything I say with a grain of salt. I've only been investing for like 5+ years, and I'm certainly not someone who's been made rich from investing. I choose much lower risk type of investments. They typically don't fail, but they also don't give you huge payouts and make you rich overnight. So I'm not a financial advisor. Just be warned, if you take any of my advice, and don't come after me if you lose money. Okay. But yeah, that's what you can do with your stimulus money. All right, guys, have a good one.